Every Bitcoin bull run has a bear trap, and I believe this was it. Yes, it was, as in past tense. Why? Because ETF inflows are back, as we saw in yesterday's video. Not only that, companies are also stacking, and we know gold's all-time high, as we're seeing now, could very well be pulling Bitcoin or BTC right behind it. Of course, recession fears are still in the air. We know markets are panicking, but history also tells us that these fears often also signal the bottom of a market, not the start of a crash. So we'll break down in today's video how this could be a massive buy the dip opportunity. And with the FOMC announcement today, interest rates have a 99% chance of remaining the same, unchanged. So that's not what we need to focus on. Instead, what we need to be paying attention to is that this could very well be the end of quantitative tightening and the beginning of quantitative easing, the printing of money. So how will this play out for Bitcoin and the crypto markets? Let's get into it. Hello and welcome to my channel. My name is Jessica. And without further ado, let us get into today's content. Okay, so first and foremost, we see Bitcoin is at 83,900 and some change. Just moments ago, we were at 84,000. So we'll keep moving on because there isn't anything really too new here with Bitcoin's price. But we know that the events of this week and other general market data and indicators are pointing to the larger picture of where Bitcoin is moving to next. We know, as I mentioned in my intro, that we have continued to see positive inflows into Bitcoin's ETFs, with yesterday, March 18th, ending with $209.1 million of value pouring back into the Bitcoin ETFs across the major investment institutions of the US and arguably the world. So once again, this sentiment speaks of smart, old money mainly, and it speaks of managers, money managers, hedge fund managers, all the managers running these funds and their general education on Bitcoin. So overall, it's a big vote of confidence back towards Bitcoin, but it nevertheless is a snapshot that does not necessarily speak directly to Bitcoin's price as we experience it, but it is nevertheless, once again, a vote of confidence towards Bitcoin. So let's keep moving forward. And okay, if we zoom out and we take a look at how past bull run cycles have played out, you will see, and I know I go through this in almost all of my videos from different angles, but I find it very important to do because we get siloed and sort of like pigeonhole visioned, tunnel visioned on the day-to-day market news or activity. And I don't know what conversations you're hearing at the dinner table or with your friends or at work. And it can be challenging to stay firm in knowing why you're investing into Bitcoin and in top crypto altcoins. So this is why I share past cycle data and information with you, because it's important to see how we play into the larger historical picture here. And you can see how in 2011, 2018, and 2011, once again, as well, the duration of every bull run was about 9 months, with a bear trap at the 6th month mark. So this year, 2025, is no different. We're seeing this bear trap right around the 6th month mark. And if we just take a look at the current events in our current time, during this moment in time of history, we can see that we are experiencing extremely bullish behavior from the general market. To mind you, Bitcoin is very new. So the fact we have 80 new public companies now adding Bitcoin to their holdings, this is the largest vote of confidence towards Bitcoin. And we know that the value that flows into Bitcoin eventually rolls over into large market caps and then the mid caps. And then that's when we have the parabolic phase of the bull run kick in. So the fact we have this many companies buying into Bitcoin and adding them to their public spreadsheets you have to think about all of the shareholders that are now getting exposure to Bitcoin or hearing about it for the first time, going off and doing their research, and how that word starts to spread and infiltrate throughout all the families represented behind these companies. So it's a bit like a tsunami, and the effect is going to be enormous. It's a bit like a slingshot when you like pull it back, pull it back, pull it back, and then you let go. That is the momentum that you can try to imagine that Bitcoin and the crypto market is building right now. So this is enormous. And as I was mentioning in my intro, this was shared by Kyle, you can see that we are seeing all-time highs in gold. And if you've seen my past videos, you would know I broke this down there, that Bitcoin tends to follow shortly after gold's all-time high. So right now we are seeing all-time highs for gold. And so this speaks, or very likely signals, to Bitcoin not being far behind it with its all-time highs. And I just wanted to share this quick commercial with you shared by Coinbase, because this once again, this speaks of the fact that like how much Bitcoin is starting to make its way into mainstream culture if you have commercials like this rolling out that are quite digestible. You know, like you don't have to know anything about how Bitcoin works, how it's programmed on the back end, how there's only going to be 21 million, how it's like the digital gold. You don't have to understand any of the technicalities behind Bitcoin or crypto at all to see the value of this video and understand right away how you might want to start doing business in crypto. So let me play it for you. Super awesome.
Crypto wasn't for him. He dealt the classics. Low miles, big blocks and bench seats, hidden gems and dusty barns, diamonds in the rough. He'd take fixer-uppers and turn them into daily drivers. But when it came time to make a sale, there were no easy options. He never could figure out why wire transfers took so long. Banks were never open when he needed them.
Right?
And cash could be a challenge in a place like this. So when a repeat buyer mentioned another option, he listened. Just a simple transfer. Secure, like a digital handshake.
That's right.
Crypto wasn't for him. Until it was.
Until it was. That's all of our stories, isn't it? Amazing. And that's why they also say you buy Bitcoin at the price that you deserve, because you'll hear about it. When you do, you'll understand the value of it. When you do, no one can force your learning curve. You think you have your aha moment when you do. And that's why they also say, you know, you're going to pay the price for Bitcoin. You're going to pay the price you deserve, right? But anyway, the point is that I love this commercial. I love how crypto is now making its way into everyday, you know, people's peripheral, into their worlds. I think it's really exciting. And I think we have an incredible future ahead of all of us. So, okay, a little bit more on macro news and how this current recession fear, even though I get it, like in large part, you know, unemployment rates are highly correlated with a recession, but we have to unpack it. And I found this thread that does a good job at it. It was shared by Bravo's research, and they basically explain how, of course, yes, and you can see this chart here, there is a correlation between rising unemployment and recession, but we have to look further into it. So let's read what they say. So they say, so far, we're not seeing that warning sign from the labor market. So of course, no single indicator tells us the full story, and that's so important to know, so important to remember. So we also track and can track corporate profit margins because it's also highly correlated and tied with hiring trends. So if a corporate margin rises, businesses hire and expand. And if the margin shrinks, companies cut costs through layoffs, right? So if we look at the data, since the 1950s, we can see that profit margins have fallen before nearly every single recession. But today, corporate profit margins are at an all-time high, suggesting that businesses are not in a situation or in a position to cut jobs. This is great, huh? That said, Trump's tariffs policy could reduce profit margins in 2025, which will cause us to see the effects next year, right? 2026. So it may lead to a recession next year, but I don't think so. We're going to get into why here in a moment. So shrinking margins alone don't guarantee a stock market crash. And a good example of this is the period between 1996, as I zoom in here on the screen, and the 2000s. So moving on, when we look at the stock market, it went on an absolutely massive run during that period. The market only declined during the 2001 recession. In fact, a similar trend played out in 2006. Stocks kept rising despite falling profit margins and only peaked when the recession hit, as you can see on my screen one more time. So to us, in today's widespread recession fears, they may likely be premature, just like they were, and Bravo's research points out, in August of 2024, September 2022, and in June 2022. In all these cases, recession concerns did not materialize, and you can see that here. Interestingly enough, these recession fears always emerged after a major market sell-off, which we've seen, right? For many reasons. It wasn't just the tariffs. There was also the whole DeepSeek fiasco where it made all of Silicon Valley and all top investors question their AI investment valuations across the top AI companies. So that also there was a shakeout there. There have been many reasons for the shakeout, but let's keep moving on. So each time that there was a shakeoff, right, and caused tremendous fear in the market, stocks had already dropped significantly, just like today. So these moments actually marked market bottoms. As I was saying in my intro, I believe we're seeing a market bottom. The market only goes up from here. So I don't foresee a deep correction, a recession coming. So anyway, in 2024, we didn't wait for a recession to find attractive opportunities. We secured an average win. Anyway, then they go on to promote themselves. So you can go sign up for Bravo's research if you want. This isn't affiliated. I don't earn anything, but they are a great resource. So anyway, now you can see how right now does not necessarily signal a recession coming in, but a market bottom, as I was saying in the intro. So alrighty, reading on now by the Kobesi letter, you can see how often market corrections lead to a recession in the US. So there have been 60 S&P 500 corrections, including the most recent one, according to the Deutsche Bank analysis. So historically, in 12% of all corrections, a recession had already begun in the previous 12 months. 32% of the time a recession took place within the next 12 months. And 56% of corrections, the US avoided an economic downturn within the next 12 months. So in other words, market corrections are only accompanied by a recession 44% of the time. So they kind of tease us with this question on, can we avoid a recession this time? So we know that with the FOMC today, here it says tomorrow because I'm on a different time zone as you, but it's today for you, the 19th. We know the FOMC is going to make their announcement today. So hopefully you see this before it happens. So anyway, this is interesting. Once again, I'm not earning anything off of this. I'm not affiliated, but I'm sharing this resource with you in case it helps you on your journey. So let me know in the comments if you want me to link it. But you can also go find Max because BTC, that's the handle on X. And they basically share this very interesting chart that draws out the correlation between the FOMC dates and whether or not, and how the market reacted because of it. So it's interesting to see how the FOMC meetings affect the market, and you'll see there's a general pattern. So while so much of the market thinks that there's going to be no rate cut, all of this, it's basically just an extension of their fear. I think there's a very good argument and possibility that it will, because we have a new President Trump, and he has surrounded himself. I was just listening today to, let me just show you this super interesting interview by the All In podcast. There's so many great parts I wanted to play for you, but here, for instance, let me just play this snapshot because you'll hear it from Scott Bessent, how this administration is so different And that is almost its own indicator, I would say, because we have completely new and radical business savvy and experienced cabinet members surrounding President Trump that know how to move the market. So this is the difference.
Doge. Well, Doge, that's the cost cutting. And it's the first time we've really ever had business people with it. This Clinton Gore commission that we hear a lot of, hear a lot about. I think it was a bunch of business professors.
But yeah, you've got real CEOs. You got Lutnick, you got Bergen, you got Elon. I mean, this cabinet is stocked full of experienced operators that can go in and identify where there's an opportunity for saving the taxpayers' money and still getting the results.
Well, it's sad. And we had this crypto council meeting the other day, and I was sitting, it was myself, Secretary Lutnick, and Tilly Loeffler. Everybody was a market person. Forget business.
Yeah.
But with Doge.
Okay, then they go on specifically about Doge, but frankly, there's so many timestamps to this podcast. I'd recommend you go listen to it. It's fantastic. And they really break down how this market's different, the relationship with the Fed. They really break it down. So I'm going to say it, as I've said it before, I know that current market conditions, have invoked a lot of fear in the market. And as we read a moment ago by the Kobesi letter, 44% of the time that does materialize into a recession. But we have to take other things into account, like Doge and the impact that's going to have on the general debt of this country and the response the Fed will end up having to new market conditions. Man, there's so much going on, with the Bitcoin Strategic Reserve being introduced. There's so much. The Sovereign Wealth Fund to include top crypto tokens, stablecoins. There's so much, so many other indicators also on the table that I don't think it's correct to draw the same conclusion as we would have in the past now that there are new and other indicators that need to be included into our market analysis. So I remain bullish, and I think this year and the years moving forward, especially during Trump's administration, will be complete outliers to typical and traditional ways of reading the market. So anyway, moving on, I thought I would just share the definition also of the FOMC, because we throw it around like everyone understands, but maybe you don't. It stands for the Federal Open Market Committee, and it's the chief body for monetary policy. Its voting membership combines 7 members of the Board of Governors, the president of the Federal Reserve Bank of New York, and 4 of the reserve presidents. All serve 1-year terms, et cetera, et cetera. So anyway, I just wanted you to have a clear understanding of what it is and who is part of this committee. So that said, we know it's today, and markets are still 99% sure or sad, pessimistic that markets are going to remain flat. But we don't know. And you have to leave some space for novelty, especially, as I said, when the chips on the table, the cards on the table are so different. So I remain bullish, but let's see what happens. Okay. That said, getting to the exciting part. Anyway, this is just a comment first and foremost on the crypto market. This is shared by Aluai Capital, and they share this chart with us, and they basically just explain, okay, as a side comment, that this crypto bull run, the only reason ETH has pumped this cycle is because of BTC of Bitcoin and not because of the money printer. So quantitative easing is when the central bank buys bonds to inject money into the economy. It's actually a very interesting relationship between the Fed and the US and how they make and lend each other money to keep the world turning. So kind of funny. They literally just invent money. They just print it. So anyway, that's what provokes quantitative easing, also known as money printing and inflation. And we have not seen that. We have been through a quantitative tightening period that hopefully is ending, and we'll find out more here in the next day, 2 weeks. And quantitative tightening, for those that don't know, is when the central bank sells the bonds or lets them mature to withdraw money from the economy. So it slows down inflation, and that's the phase we've been in right now. So shared by CoinDome here, they say the following: the Fed's quantitative tightening is over. After years of shrinking the balance I read, the Fed has finally hit the brakes on quantitative tightening, ushering in a new era for markets. So, long story short, it seems that the quantitative tightening has stopped, signaling a potential shift back to liquidity-boosting policies like quantitative easing. So this is huge for investors, of course, so we can expect markets to rally as liquidity flows back into the market. Anyway, you can go follow this on Polymarkets. There's a big vote or poll that's always going on. Polymarket is right a lot of times, but also sometimes it's not, because it's a collection of the people participating and their sentiment. So if they're down and out about the crypto market, then obviously they're going to vote negatively. But Polymarket is also right a lot of the time. So it's just worth being in tune with. But it's very important to do your own research and know how and what you feel and believe, mainly what you believe, because feelings can come and go. So that's not a good way to run your portfolio. So anyway, here we can see a chart as well that's quite, how would you say it? It's a good depiction showing the relationship between quantitative easing, quantitative tightening, and the effects it has on Bitcoin. So as you can see, we are currently in red. We are in the quantitative tightening phase where I'm circling here on the screen. So we'll have to see what the market decides to do from here. But there are many reasons to believe that quantitative easing is going to start soon-ish. But all right, guys, I hope this video gave you a sense of where we are in the market, gave you a reason to believe that this bull run, which may have decoupled from traditional markets, I don't know, it could really do that. It could really do that, but we'll have to see. For now, we still have and hold a strong correlation with gold. So we could see gold reaching new all-time highs here soon. And we have the FOMC announcement today on rates. So I remain optimistic, but who knows? The Fed is its own separate body and we don't know what they're going to decide. But stay tuned. I will cover the market events in tomorrow's video. So for now, take care. Stay firm in your belief and conviction in Bitcoin as a store of value, because you can see the world and 80 new companies are buying up Bitcoin. So this is for a reason, right? And bullish days is what I say. So anyway, take care and I'll catch you in my video tomorrow.